You look through April, May, June, July, we never went above 3 months of inventory there, which would still be deemed to be a seller's market by all accounts of sort of a textbook way of looking at it. But you look at these prices, 801, 730, 723, 659, 651. I mean, between May and June, that was like a 10% decrease month over month. And still in May, you're looking at inventory levels of just over a month. But you see how the inventory, how quickly it rose, and that just show you how at the exact same time you had extreme buyer pullback, you had a lot of listings coming on.
Yeah, and I think what that really speaks to, right, is the fundamentals of investing, or even as a consumer, if you're looking for your property, it's like, what are you willing to pay? Like the value of a property is fully subjective to what you're willing to pay as a consumer, or as an investor, it's fully predicated on what strategy you're going to execute with. So Mitch, what are some of the more popular strategies you're seeing in Peterborough right now? Is this a great time for a BRRRR, or are people still flipping? All right, everybody, welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, and today I've got Mitch Cleary from Kamar & Cleary, the Century 21 brokerage, here to give us the Peterborough market update. So Mitch, thanks and welcome back to the channel. I'm excited to hear about Peterborough's market update because I actually know nothing about Peterborough. So I'm just as excited as everybody watching this. What do you got for us, man?
Yeah, well, thanks again for having me on. And Adam, pleasure to do the first episode here with you. And we'll just dive right into it. So I mentioned to Adam before we started the shoot here, I'll try and keep this slide segment as tight as possible for everybody so we can focus more on the Q&A, and I try not to put everybody to sleep with a bunch of slides. So going to shoot for around 7 minutes or so here, and we'll see how that goes. So jump right into it. First things first, this is weekly normalized showing chart. So you look at right here, what you're going to want to focus on is this orange line. That's 2022 weekly average. And you're going to see that on a normalized basis, looking back over the last couple of years, the showings right now are as low as the activity was when we're looking back, in the middle, right when the pandemic struck and nobody knew what the future was going to be economically or in the real estate world. And you see how it compares with last year. So we know our sales activity has been down every month. It's between 30 to 50% in terms of the total sales volume, but we're getting calls from people, hey, are you getting any showings on your listings? And the answer is the same, is that nobody's getting any showings, and just the same, we got a CRM full of buyers that aren't going out on any appointments, and the proof is in the data there that it's happening to everybody. So not a lot of activity, period, right now. I want to park on this one for a sec. City of Peterborough, you're going to see the days of inventory, which this only became a days of inventory metric over the last couple of years. This was always months of inventory, and it got moved into days because we're so frequently hovering under the 1 month that to make relevant comparisons, it was more applicable to talk about it in days. I'm sure anybody watches this channel knows, but for anybody who doesn't regularly, I'm just going to explain. This is simply the amount of active listings divided by the amount of sales the month prior, and it punches you out a metric that is an indicator of sort of the whether you're in a buyer or seller's market. It's also known as the absorption rate. So people have been saying for a long time that you're in a seller's market when you're above 4.5 months of inventory, but that's just been proven time and time again not to be true. It's more of a second derivative, whereas if the inventory is rising sharply in a given time period, that prices can move dramatically, because we never really, you look through April, May, June, July, we never went above 3 months of inventory there, which would still be deemed to be a seller's market by all accounts of sort of a textbook way of looking at it. But you look at these prices, 801, 730, 723, 659, 651. I mean, between May and June, that was like a 10% decrease month over month. And still in May, you're looking at inventory levels of just over a month. But you see how the inventory, how quickly it rose, and that just show you how at the exact same time you had extreme buyer pullback, you had a lot of listings coming on at the same time. So to round that whole line of thinking out, I just want to show you that here we see inventory from 19 days in March, rises in April, rises in May, rises in June, rises in July, and then August, the first time this year beyond the peak in March that we see that number go backwards, the months of inventory or days of inventory. So potentially, we'll see what comes up with September's numbers, but potentially a sign that we're sort of troughing out here, or at least starting to curve the rate of change of price decreases and inventory changes, starting to indicate that it might be bottoming out. Not to say that this is the bottom, but that the shape of the graph is starting to change, and instead of a straight down drop, that shape's starting to smoothen out a little bit. Just want to park on this one again for a second to indicate sort of the same thing. Is when you look at the price graph here. So first of all, from the peak in March down to August numbers here, we are down a little bit over 20 as a percentage of prices. So, going from all the way from 801 average price in Peterborough, which was an absolutely, insane high, down to 638, which feels more normal for the city, but still it's historically it's high, but that's a 20% decrease across these, this half a year period. So let's talk about the shapes of these graphs. Number of sales in the blue, you see sales tanking, going down, 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 down. Prices go with them. Now, I want to bring everybody's attention to this again, because even though the average days on market has continued to rise, this number of sales has gone up again in August, which is not, we're not quite in fall territory there yet. So September's numbers will be very interesting. But at the same time that we see number of sales starting to change upwards in its trend pattern, we also see the number of new listings going down. The number of active listings is going down. So we did see that's reflecting back on that months of inventory statistic that I gave you in the slide before, where we know that the months of inventory has gone down, and that is indicated here by these two lines where you see active listings is dropping, number of sales is going up. That means when you divide these two things into each other, you get a lower number in terms of that metrics, the MOI. So it's both just showing you that if both these things keep along the trend lines that they're going, it indicates that we are starting to smooth out on that roller coaster ride down. And there's right now, if someone were to look at it and guess what's next, independent of what's going on in the macroeconomic level, it would appear that September or October might be the bottom of the graph for us here in terms of the way that it's looking. But moving on, this is, I don't know why, sorry, this number here from December 2021, but you can see it is just interesting to note that most of last year's gains were wiped out. We had that huge run up, 20% price increase between basically the end of October and the start of 2022. And the amount that we've gone back is more or less making it a wipe from last year. I want to just quickly go over the county because its metrics have been a little bit different. Our county encompasses an absolutely massive area in terms of its geography. So it's hard to paint out what is a normal or what is an average here, because you have everything from little tiny cabins and small subdivision homes in sort of remote small towns, populations of 1,000 that might sell for 600,000, and then you have $2.5 million waterfront properties all selling. So these are very skewed statistics and hard to really draw the most relevant data points out of at the really backed out scale. But I just want to show days of inventory has continued to rise, not the same trend as we've seen in the city. And not really too sure exactly why that is. One thesis might be that there is a bit of a reversal of the COVID work from home trends, and a little bit of the reversal of that vacation home is everything sort of way of looking at the world, where now that people can travel and a little bit more free to move about, maybe a little bit less emphasis on the Airbnb rental strategy and just a little bit less fervor for buying cottages at the prices they're at. So that's something that's of interest, and these prices have taken a pretty steep tumble here too. They've fallen more than the city. You look at this price in March, $950, all the way down to $714 now. It's a healthy, mid 20%. Just going to show you the one last thing here to show you that same type of lineage graphically is you see how the price has been a little bit more scattered up and down, and a lot of this can get skewed just by how many big ticket cottages sell in any given month versus the next. But you do absolutely see the number of active listings continuing to rise. The inventory is going up there. We do see a little uptick in the sales. also right here, along with that uptick in sales in August, we see an uptick in the number of new listings. So as long as this number of active listings keeps rising, we're going to see the price in the county continue to have downward pressure.
Yeah, some very interesting insights there. And honestly, I was a little bit surprised by the average prices at their high highs. So getting back to February or whatever month there was the absolute high. And I think though Peterborough seems to be on pace with the rest of the province in having had a 20% drop. And what you said is essentially wiping out those gains. If you were an investor and you're considering buying in Peterborough, is this the time to do it? Or do you think a later market is more opportune? Like, are you seeing deals come up as you're seeing those listings sit?
Totally. There's a lot of active listings in several of these price segments down around, in what sort of our sweet spot for these, secondary suitable bungalows is in the mid fives. And it was until just recently this year when you saw that number go below the 6, and you do see a lot of them, a lot of price competition. Everybody's trying to get that high 5 number, but you do see a lot of listings that just sit, and then the odd one will go for a price that is sort of an outlier below what you would have expected. And it's just indicative of that. If you have 10 people all trying to sell the exact same commodity without much differentiation, it's all about who's the most motivated out of that group. And not everybody's gonna have the same reasons for selling it at any given time. We have some of them are families, some of them are estate sales, some of them are people that are that are going broke, quite frankly. There's all types of different scenarios. So it sort of is getting back to that game. I mean, man, we didn't like hearing this when people came through during the peak of things is I just got to get offers in. I just got to get reps in and get offers in. And that wasn't really a theory that worked when the market was so on the rise, because so many people were just putting in bad offers that never really had any chance of competing. And they weren't even in this realm of reality of what might be expected to get accepted. But now it's back to that, like, you never know kind of thing, right? Where you really do just got to go put offers in, because it might be a favor for somebody rather than an insult. It might be like, oh, thank goodness there's something we can work with, So it's kind of back to that.
Yeah. On that note, I actually noticed as you were kind of skimming through some of the slide deck there, that your essentially sale to listing price is actually down significantly as well. Mm-hmm. Where in the past, it looks like perhaps, a lot of properties were selling over asking, and now I think it was sitting around that 96%. So I think that's a decent observation or a decent data point for anybody making offers right now, is just to think like, the listed price is actually probably far closer to what price they actually want to get accepted compared to, any time in the last couple of years.
And a ton of cancel relist, ton of price changes, where that final, like for that metric to land out at its 96%, a lot of times those properties could have undergone 1, 2, 3 price decreases before that deal comes through, and still lands 4% below what they were looking for on the final round of their price decrease.
Yeah, and I think what that really speaks to, right, is the fundamentals of investing, or even as a consumer, if you're looking for your property, it's like, what are you willing to pay? Like the value of a property is fully subjective to what you're willing to pay as a consumer, or as an investor. It's fully predicated on what strategy you're going to execute with. So Mitch, what are some of the more popular strategies you're seeing in Peterborough right now? Is this a great time for a BRRRR, or are people still flipping?
Yeah, so one observation that's really worth bringing up, because it is just so noteworthy, it's bizarre really, is that we sort of had this general theory during COVID that a lot of student rental stock would revert back to split units and single families, because that market really dried up and became very risky. As a lot of our, Trent University, Sir Sanford not so much, but Trent University very much so, was foreign student dependent. And a lot of people all of a sudden were taking their studies from home, and they didn't show up in Peterborough. So that all these people were worried about filling their rent by the room rental situations. And as far as we can see, a lot of that stock disappeared as people shifted towards catering towards the market during COVID, which is a lot more families looking to relocate. And now there is literally signs around Trent University saying, if you have a room in your home that you're open to renting, like, please help us out. There is so much demand on the student rental side of things that we're starting to see those rent by the room rates go up. For the longest time in Peterborough over the years, it felt like $500 was just stuck rent by the room number that would never move. And now, depending on who you talk to and what they're offering, their value offering is in their location, that number ranges, from 600 up to 750, depending on the situation. So we're seeing extreme demand on the student rental side, so the rent by the room side. There is definitely issues with people getting labor and materials on the secondary suite conversion side of things. I think it's still an effective strategy, but we have heard of people having issues with their appraisals coming back. We do know that the garden suite bylaw change will be coming down the pipes for Peterborough as well, which we know we've seen that in Toronto, we've seen it in other municipalities. It hasn't made its way here yet. I believe it's in Lindsay, which is just around the corner from us, where you'll be able to have your secondary suite and then eventually your laneway home in addition to that as well. So those are a bit longer term plays because you do have the construction bottlenecks right now and the appraisal issues with whether or not you can actually burr that stuff on the other side. We're seeing appraisers being very timid still. So not certain that anybody's actually going to walk in and knock it out of the park on the burr. But I think that as soon as the psychology shifts in the market again, by the time someone buys a property right now and gets permit ready and gets the work completed and gets that thing rented out, if things continue the way they are, they could be, by the time they even get it ready to be reappraised, be back into the good, but that's purely getting into speculation there.
Yeah, sure. To keep things relatively objective, like how would you say the rental market is right now? Is there a strong employment situation in Peterborough at the moment?
Strong. Yeah, the rental market's strong. And we've done several leases for clients over the last few months. It's not something we normally do, but we've done it just as a way to sort of supplement our business in the slow market and help people out. And what we've found is that we've had some rentals that are looking over the 300 or over the $3,000 a month mark, and they were very difficult to find occupants for. But as soon as we got stuff that was in that like $2,200 to $2,700 range, really strong demand, where you're getting 20 plus requests over a weekend, you're getting 8 competing applicants that are all very good candidates. And it seems to be in line with what we're seeing across the whole province, where the rental rates have gone up. We have reason to believe that as the populations continue to grow, I mean, we immigrated 250,000 people over the last 6 months, which used to be a good year. And that demand has to land somewhere, and people aren't buying, but it doesn't seem like they're not buying because they don't need somewhere. It's just because they are of the mindset, just this classic deflationary mindset. Why buy this week when it'll be cheaper in 2 weeks from now? So all this demand's piling up, and it seems like it's appearing in the rental market. So Peterborough's no exception to that, where we're seeing strong, quick rental price growth.
Yeah, I think that makes complete sense. And again, what we've been kind of tracking across the channel with all of our various market updates is that, we're seeing this supply. There's a lot of supply. The demand has to still be there. It's like the demand for a house is not really attached to the price. Like you need somewhere to live or you don't. And that's kind of how that works. So with this amount of immigration, I agree with you that there is a high demand for properties and for places to live. And in these times where there's uncertainty in the market, it's fantastic for investors to use this as an opportunity, perhaps, to get into more rentals when these properties are effectively on sale from where they were.
Totally. And I would say, I mean, the sentiment is it feels like it's past its worst, like the fear or the doubt in the market. To me, it felt like it was at its worst about a month and a half ago, and people are starting to question now because there's just so much recurring messaging from the Bank of Canada, and you're starting to see all the stuff where they're, the inflation numbers are coming in below their targets, and whether or not that's accurate or true, if that's the way they're painting the picture, it's indicative of the way they're going to start steering their policy. So I think that when people pick up on that, even just friends that are my age and they're, everybody's sort of this backyard economist now. And there's so much hyper awareness of what's going on with that stuff that it feels like people are of the mindset that we're near the bottom. And so as far as I'm concerned, whether we actually are or aren't, depending on what macro factors are going to play out, I think as long as people think we're near the bottom, they're going to start behaving as though they think we're near the bottom, and it can change the outlook over the next 6 months. So I think that my partner there, Tamer, brought up a great quote to me this morning, and I'll just sort of paraphrase, but it's Warren Buffett's, be fearful when everyone's being greedy, and be greedy when everyone's being fearful. And I think that people are still quite fearful, but when you look at it from an objective standpoint, it's questionable how many more times they're going to rate hike. I think nobody expected even to get this far. Of course, obviously we could all be blown away. But considering the likelihood that we should be right around the corner from a bit of a normalization of, the cost of money and the cost of borrowing, I think people are still extremely negative about the outlook of the market, considering that those supply demand fundamentals we just talked about. So I think the cost of money is set to normalize. I think the immigration has still been relentless, and the new construction, there's been halts to new starts in this time. The builders have been pulling back on new projects, and whether it's in 6 months from now or a full year, it all sort of signals towards a strong rebound at some point, as far as I can see it.
Yeah, absolutely. I think this is once again sort of a story about time in the market and not timing the market. Whether or not we are at the bottom, if people are able to find great deals right now that fit their fundamental strategies, I believe that it's a great time to capitalize on those opportunities. And that's what I've been doing myself. I, in fact, actually wore my "Time is on our side" shirt today so that you guys know I'm thinking about all this stuff. And again, if you guys take a long view on these types of things, I believe that it's possible to invest in properties now and have great investments over a long enough horizon. And I think that's where we need to be, again, returning to fundamentals, having multiple exit strategies, and considering the fact that it is possible the Bank of Canada will continue to raise the rates a little bit, and then that eventually that will have to level out. I mean, it's just a matter of fact. So Mitch, is there anything else you wanted to add today? If not, that was a fantastic market update.
No, I think that's probably it. So if anybody has any questions, they can feel free to reach out to my email there and get hooked up with a conversation with the team. And if they're looking for specific advice on Peterborough, we're here to help.
Awesome, guys. If you haven't already subscribed, please get down there and subscribe to the channel, and make sure you get those notifications on so that you guys can return and get these updates every single month. The September numbers are going to be very fascinating. The October numbers are going to be even more fascinating, and we're going to get a better picture of where this market's headed as we continue to follow along the journey and get updates from our experts in the field in these markets, like Mitch and Peterborough. So again, thank you guys for tuning in, and we'll see you guys back for the next market update.